Warren Buffett is one of the greatest investors of all time since 1965 till now. So in this video, let's look at Warren Buffett's top 5 stock holdings leading into 2023 and do a bit of analysis and a breakdown as to why he holds each one. Now, just analyzing these super investors' portfolios can give you a great insight for making your own portfolio and starting your own research. Now, let's turn our attention to the super dad of value investing and see what Buffett's top 5 positions are leading into 2023. So, these 5 businesses actually account for 75% of the portfolio, but it's worth remembering that this portfolio is actually 49 stocks long. So, still, it's not the be-all and end-all. Secondly, also remember when you're looking at the Berkshire portfolio, not all of the stocks in here are actually Buffett's. Of course, Ted and Todd also select stocks for Berkshire Pathway, although the top 5 stocks are all Buffett picks. And then lastly, remember that because of Berkshire's size, they can really only invest in the world's largest companies to actually be able to invest enough to shift the needle for them. Thus, these 5 stocks certainly won't be the highest returning stocks you could possibly hold, but they are the best stocks for Berkshire Hathaway's position. Now let's get into the countdown, where number 5 is American Express at 6.91% of the Berkshire's portfolio. So, Buffett first bought a stake in American Express back in 1994, and he hasn't touched the position since 1998. Now that sounds insane, but that's how Buffett is, With his investment strategy, he's very much focused on buying great businesses and holding them for as long as he possibly can, and so far, he hasn't found a reason to sell his stake, so he hasn't. Overall, Buffett invested $1.3 billion to form the position, and it's a stake that today is worth about $20 billion. So, what does American Express team do? Well, as most of you already know, they are one of the world's big 3 card providers alongside Visa and MasterCard, and they make money in a few different ways in Q3 2022. Their biggest revenue chunk by far was their US consumer credit card business, which are fees and interests collected on consumer cards in the US. Then, followed by the commercial credit card business, where all the fees from international credit cards, and then followed lastly by merchant fees, which is the fees merchants have to pay American Express to accept American Express cards. Now, by looking at their pre-tax segment income, we see that the actual income from merchants takes over a big chunk of the pie, and the income from international cards goes way down. So that's how American Express makes their money, and interestingly, if we turn over to simply Wall Street, we can see that it currently trades at a much lower P than its competitors, but with a decent margin of safety. Again, no, that does not mean you go out and buy it, but it does mean that this could be a business that's worthy of additional research. Alright, now moving on to Buffett's 4th largest holding, coming in at 7.57% of the portfolio, we have Coca-Cola. This is the classic Warren Buffett stock. Buffett first bought Coca-Cola back in 1988 after the sudden stock market crash of 1987 plunged Coca-Cola's stock price by about 25%. And this was the first example of the Buffett approach. Now, this approach is great, of buying a business at a reasonable price that has a big fat moat. Buffett then added to the position in 1989 and again in 1994, and as of 1995, Berkshire had invested $1.3 billion in total. And like his position in American Express, Buffett to this day still holds the shares, which now worth over $22 billion, and that doesn't even include dividend. The thing that you really must take away from Buffett's investment in Coca-Cola is just how important moats are. That's the single biggest reason Buffett has never had to sell, and it's why the shares are worth so much today. Coca-Cola just has a massive brand moat, and Buffett identified this back in 1988. Now, even last year, Coke raised their prices a lot because of inflation. And which way did their sales go? They went up. Now, turning to simply Wall Street, we can see that unlike American Express, Coca-Cola is sitting at an industry standard P of around 28% and does seem fully valued based on the discounted cash flow analysis, but nonetheless, Coca-Cola is definitely worthy of some time and research. Okay, now moving on to Buffett's third largest position heading into 2023, we have Chevron. Chevron is the seventh largest oil company in the world by revenue and is actually more of a recent addition to the Berkshire portfolio. Buffett started buying Chevron in Q3 of 2020, but notably in Q1 of 2022. He bought an additional 121 million shares, which at the time catapulted the company to Berkshire's fourth largest holding. Now, this is quite simply Buffett, just holding a high-quality business and just buying it at a fair price. Now, what we've seen in the world since Buffett started buying both Chevron and Occidental is that the supply of oil has been constrained and the demand has risen, which has actually helped oil prices stay quite elevated over the last year or so. But it's worth noting that the primary factor that entices Buffett to buy are the strong economics at the underlying business, regardless of what oil prices are doing. Now, out of these top 5 holdings, Chevron is not a strong moat company at the end of the day. They produce a commodity and their business and stock performance is very much dependent on the price of oil. So it doesn't fit a formula quite as perfectly as, say, an American Express or a Coca-Cola, but it's still a position that has worked out very well for Buffett so far, with the stock at all-time highs. Alright, now moving on to Buffett's second largest holding, yes, you know it, Bank of America. This is one of only 2 double-digit positions in the Berkshire portfolio, occupying 10.3%. So, Buffett first bought Bank of America stock back in 2011, but it became a regular top 10 holding after Q3 of 2017. When he exercised his stock warrants, he acquired back in 2011, allowing him to buy 700 million shares of common stock, 7.14 cents per share. Now today, that equity position is now swelled in size to over 1 billion shares. A position is now worth $30 billion. Now, you must know that it's much more likely that you'll make a killing in the stock market if you stay within your circle of competence. And that's exactly how Buffett originally got into Bank of America. As Reuters notes, Buffett began investing in Bank of America at a time that many investors were worried about the bank's capital needs. They were still dealing with the aftermath of the financial crisis. But it's those dark times when you can actually find some really amazing long-term opportunities if you genuinely understand the business and the industry that it falls in. And that was exactly the case with Buffett and the banks. And fast forward a decade and Buffett has definitely come out on top. Then turning back to simply Wall Street, we can see that their price-to-earnings ratio is marginally lower than their peers. But admittedly, that is for lower earnings growth. And if we do turn to their DCF, simply Wall Street's model seems to suggest that maybe the business is worthy of us doing a little bit more research. Now let's finally get to stock number 1, and Warren Buffett's largest holding by a long way is Apple. As of right now, the stock takes up a massive 41% of the Berkshire Hathaway stock portfolio, literally 4 times bigger than the Bank of America holding, and this has to go down as one of Warren Buffett's best ever investments. Maybe not by a percentage, but certainly by sheer dollar size of the return. And this is also a relatively recent position from Buffett as well. We're going back to Q1 2016, when Buffett first bought into Apple. He bought 39 million shares, but it was Q4 of 2016, then all of 2017, and the start of 2018, where he really sunk a lot of money into the company. Across that time period, he bought about 950 million Apple shares at a total cost of around $36 billion, and this is a classic example of Buffett buying a great business at a reasonable price, because during that time period, Apple's PE ratio hovered between 13 and 16, as investors were concerned that revenue growth had stalled and the Apple's iPhone had saturated the market. But Buffett was able to absolutely cut through the noise, and what he found was that Apple's brand and switching mode was so strong that can never sink but remain on top. Even if iPhone sales just never grew again, even if it was just by raising their prices, Apple had a moat that gave them pricing power, and with the stock trading at a reasonably low PE for a big tech company, he bought all the stock that he could, and boy, did it pay off. The original $36 billion investment has now snowballed to a value of $120 billion. But interestingly, investors are once again getting a little bit nervous about Apple because over the last 12 months, the stock has fallen about 30%. So it'll be interesting to see what Buffett does with the position this year. Although turning to simply, Wall Street does look as though Apple has simply been pegged back to fair value from being very overvalued. That's it for today, guys. Make sure you leave a like if you enjoyed the video. Thank you very much for watching, and see you guys soon.